Yes, yes, yes. Hello, 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 and good evening, good afternoon, good morning, wherever you are. It's quite exciting. It's a pleasure. My name is Conrad Afande. I'm the Manager for Education and Awareness at Capital Markets Authority. So we're just inviting guests to come in. I can see we've got quite a lot of people that are coming in. We thank you. We thank you for taking the time to come with us. We've got 1.5 hours of really good information. I promise you, there's a lot of exciting information because people, when you see the panel that we've got lined up for you, I mean, good God, this is like the Fantastic Seven. Forget the Fantastic Four. This is Fantastic Seven. Okay, I thank you. And I know we've got people from all over, wherever you are. You can actually, if you get a chance, you can type in the chat. Just tell us where you are. And by the way, when we talk about diaspora, it doesn't mean, even if you're in Kenya, okay, it's good to hear what the issues are. You could be somebody who's planning to be a diasporan. You could be somebody who's come back. You could be somebody who is in Kenya, but you've got family that's in diaspora and you'd like to give that information. I can see we've got somebody from Qatar. I can see Qatar there in the chat. Yes, Sarah Nguta from Qatar. Karibu Sana, it's a pleasure. And just for the record, before we get into the panelists, just understand the reason that we do it on a Sunday is because we absolutely understand that on the weekday it's a bit difficult to get people. Whatever time you try, you might be at work. So it's a good thing when we do it on a Sunday. You just dedicate 1.5 hours and then we have a lot of information. I can see Jamlik Raghu from Abu Dhabi. Okay, good stuff. I can see Rose from Kuwait. Good stuff. I can see David from Alabama, USA. Karibu, David. Yeah, just keep them coming, keep them coming, keep them coming. So let me start by actually, we've got a lot of information, as I mentioned. This is a diaspora webinar. It's about making money through capital markets. That's pretty much what it is. It's about money. We'll keep it simple. And the panelists that we've got here for you are very well, they've got a lot of experience, but we will talk to you in layman's terms to make sure that you understand how the capital market is in Kenya. What's really fascinating is whatever you are, the USA, South Africa, whatever, oftentimes you rely a lot on the media. And sometimes when you hear information about Africa, about Kenya, it could be misleading, and sometimes the media may over-portray something in a different angle. So it's good to hear it right here from the horse's mouth, okay? And that's why we're here this afternoon, this morning, this evening, to actually talk about, capital markets, okay? So allow me to begin let me let the panelists introduce themselves. Let me start with the regulator. Just tell us, your name, your role, and maybe a little bit of introduction. So we'll start with Kamunyu Njoroge. You can turn your camera on, and then you can welcome us.
So thank you very much indeed. I hope you can hear me, Conrad.
Yes, I can see you. I can even see you. Yes.
Great. So thank you very much for having me. My name is Kamunyu Njoroge from the Capital Markets Authority. I take care of education awareness and certification of the authority. And just to let them, those who are actually now on the call to know is that the CMA is a regulator. I think we regulate all the players within the market, all the service providers, all the market players who need to have a license, in doing the business that they do. In fact, I mean, the panel that I belong to, all the people who are there actually licensed by the Capital Market Authority. And we have a twin mandate, which is one, to regulate the capital market industry. I think in short is really just making sure that we get the bad guys out of the market so that the good guys can actually do business. And that is done by making sure that everybody operates by the rules. I think the other mandate is really to facilitate the development of capital markets. And here, what we try to do is just make sure that our products, our services meets and responsive to the needs of investors. So we try to continue innovating and try to continue addressing any existing and emerging impediments within the market. Thank you very much, Conrad.
All right, thank you very much. And I noticed, Bana Kamunyu, you have a very interesting environment around you. Are you presenting from a tree, like a nice tree behind you? did you plant the tree and then get to the top saying presenting from? That's fascinating.
Just know that I love where I am. I love where I am.
Yeah, okay, and let me welcome. I can see we have people from Taita Taveta, from Meru, even from Nairobi, from New Jersey, from Sweden. I can see Derek. I can see Florence. Thank you. I can see Grace. I can see Margaret Gavu from Poland. Karibu Sada, such a pleasure. And then next we'll have Samantha Kibuga. If you turn your camera on and introduce yourself. Oh, sorry, your microphone. The microphone.
Sorry about that. Good evening, everyone. My name is Samantha. I'm from Kingdom Securities Limited. Kingdom Securities is a stock brokerage firm, which is a subsidiary of Corp Bank. And I'm currently the team leader at Kingdom Securities, the managing director and CEO at Kingdom Securities. I'm very excited about this forum because financial education or financial coaching is very important to me. So I'm looking forward to the session. I'm looking forward to an interactive session of just engaging with you and seeing what value we can offer you from wherever you are. So please do engage us. Thank you.
All right, thank you very much. Thank you very. There's a bit of static with your camera, so maybe it's the internet connection, but I think we can hear you well. My next guest, you've probably seen her in her YouTube channel. She's very passionate about awareness. Rena Hicks, say hello to the people.
Good evening. Thank you, Conrad. Good evening, good morning, good afternoon, wherever it is that you're joining us from. I am really thrilled to be here with you this evening. My name is Rena Hicks, and I run the operations of FIDA Investment Bank, which is one of the good guys. As Kamunyu has said, we are licensed by the Capital Markets Authority. And we basically link our investors to great opportunities. And we're here to help our customers to know where to invest their money, and we guide them in that process. And so I'm thrilled to be here today. We are beginning with talking about stocks, but we deal with many different investment opportunities at the exchange. This is just where we have begun. We're also a member of the Nairobi Securities Exchange as well. And I generally in the bank or in the investment bank also deal in corporate finance. So you might be there and you want to raise capital for your business, and we are happy to have a conversation around that as well. Thank you so much. Back to you, Conrad.
All right, thank you very much. I told you, hey, you ain't seen nothing yet, man. They're coming. Next, we've got Mumo Mutisia. Mumo, say hello to the good people.
Thanks, Conrad, and everyone else who has come before me. It's truly a great honor to be here today. My name is Mumo Mutisia. I'm the General Manager, Strategy, Commercial and Technology at the Central Depository and Settlements Corporation Limited, CDSC. We are a licensee of the Capital Markets Authority, or what you'd call an approved institution, private limited company, and our work in one word is trust. We sit between the buyers and the sellers. We make sure when you buy or sell, you get your dues. We are the entity that holds your shares and your accounts when you're participating in the market. And we are very happy to have these conversations today. I think personally for me, and I believe for CDSC as well, investor education is very critical for us because we believe when investors are well informed, then they can make the right decisions in the market. They can get value from the market. I'm a huge proponent of generational wealth transfer, and I believe it's critical that future generations receive not only the wealth, but the information that created that wealth. So I hope we'll have a good time and learn from today's session, and I look forward to this amazing information that we'll get here today. Asanteni sana, and let's see how this goes. I'm really excited about this. Asanteni.
All right, thank you very much. And as you speak, I think we've got about 127 people that have joined in, which is fantastic. And we'll keep time to make sure, because we understand it's Sunday and we won't keep you for too long. Moving on, we've got the Nairobi Securities Exchange. Bwana Justice Ogalo, Karibu.
Good morning, good afternoon, good evening, good night to everyone. Thank you very much, Conrad, for the introduction. My name is Justus Ogalo. I am the Derivatives Manager at the Nairobi Securities Exchange. So the Nairobi Securities Exchange is the premier platform and marketplace in Kenya and East Africa that provides a platform for SMEs and companies and corporates to be able to raise capital. And we also provide a marketplace for investors to be able to buy and sell shares in these listed companies and to be able to earn a return from capital gains or the increase in the pricing of the shares, as well as the dividends, which is the profits paid out by those listed companies. So looking forward to having the conversations today and supporting all our investors across the globe. Thank you.
All right, thank you very much, Justice. And as you're speaking, I can see more people joining in, but almost 140. And I can see we also have our very own Lucy from Nyeri County. Lucy is a CMA senior trading specialist, so hopefully we'll get a chance to chat later. Welcome, Lucy. Moving on, I'm hoping Johnson Derry, are you back with us, Johnson? Yes, I can see you. Say hello to us. Yeah.
Hello, people. Thank you for having us, Conrad. I work for ABC Capital, where I work as a corporate finance manager, and I'm very passionate about the role of the capital markets with linking investors and entrepreneurs. And here today, I think the main idea is to convert savers into investors, and we hope that you'll walk with us in this journey of building our good nation, Kenya. Thank you very much.
All right, thank you very much. And then last but not least, we've got Ronnie. Ronnie, say hello to us. Ronnie Choker.
Greetings from wherever you're tuning in from. My name is Ronnie Choker from AIB Axis Africa. AIB Axis Africa is an award-winning investment bank with a suite of financial services ranging from stock brokership, fixed income services, derivatives, and corporate finance. I serve as the senior research analyst, driving thought leadership. I believe driving actionable and in-tune insights into the capital markets empowers investors to make the right decisions. I'm so excited to be here. Looking forward to engaging with you.
All right, thank you very much. And I must say, I'm really digging the background. Is that a background? Or is that your real apartment? if that's your apartment, how do you afford it? Maybe that could be the session today. Yeah. All right, so I think we'll just get to it. We've got 145 people. Karibu, it's a real pleasure. And what we've done for you folks is we want to make this interesting, and we've actually split the panel into two sections. The first section will have Ronnie, Justice, and Rena, and we'll be talking mostly about the market. And then we'll switch and go to another session that will have Johnson, Mumo, Samantha, and Kamunyu. Okay, and we've got a lot of exciting. And before we get into it, we thought it's a good idea to set the stage. We just want to do a 10-minute presentation by none other than Ronnie. And Ronnie, as you can see, he's our senior research analyst. He's got all the data in his fingertips. So let him give us a 10-minute presentation on just some of the interesting things in capital markets, some of the counters to watch, the trends that you've seen. So without further ado, I welcome Ronnie to do your thing. Exciting. Over to you.
Thank you. Allow me to present my screen. Are you able to see my screen, please?
Yes,
confirm?
perfect, yes.
Wonderful. So I'll begin my presentation right now. So the objective of my presentation is to highlight the salient features of our stock market that have been shaping the performance both in the positive and negative direction. And I hope after this presentation, we'll be able to deepen the understanding on the forces shaping the direction of our industry. And I'll do that by first looking at our macroeconomic background so far in 2023, I'll then proceed to answer the question, why should you invest in equities? Afterwards, I'll then proceed to give an overview of the historical market performance before concluding with a sort of 2024 stock recommendations. So how has the Kenyan economy been performing so far? We've seen the Kenya's economic growth remain resilient, as signified by the 5.4% growth in GDP over the second half of the year, largely driven by a recovery in the agricultural sector. We've also seen the services sector display resilient growth, largely spearheaded by growth in the financial services and real estate sectors. Also, the hospitality sector has remained firmly on the recovery path, signifying that we are now phasing off the legacy effects of the coronavirus pandemic. However, this industry sector came under the pressure of rising inflationary pressure, signifying waning consumer spending and rising input costs. However, looking forward, we expect economic growth remaining resilient, largely driven by accelerated recovery in the financial services sector. So straight on to why should you invest in the equities market? I think we often forget the benefits we derive from the equities space or as an asset class. Firstly, the benefit of the equities market is that it's a proven route to earning well above average returns in the form of capital appreciation, and the second channel through dividend yields. I think these two channels give you a compounded total return that is well above the sum of the two channels put together. The second benefit is that you're getting high liquidity because you're dealing with listed equities. There is an ease of entry and exit into equities that very few other alternatives offer. That benefit is that you are able to take advantage of business cycle swings. Notably, you are able to benefit when the economy is on an upswing. And next benefit is that this is also a proven vehicle of building long-term capital savings. And finally, because of arising innovations such as the derivative space, we are seeing you are able to get alternative investment strategies ranging from short selling and margin. So what has been the story of the Nairobi Securities Exchange over the past decade? I think the impact of business cycles on the stock market performance can best be appreciated by taking a long-term view. If you look, for instance, at the period between 2013 as we headed to 2014, we had primarily low interest rates in that season, and that supported a resilient performance of our stock market, signified by both indices. However, heading into early 2015, we saw interest rates begin to rise, and that, of course, weighed adversely on the equities performance. But however, in the build-up to the 2017 general elections, we had an easing of interest rates to support economic growth, which, of course, led to a bull run in the equities space. And economic growth remained resilient also in the months leading to 2020. However, at the onset of 2020, we had the COVID-19 pandemic, which had a protracted weigh-down effect on the equities performance. However, following a raft of measures to stimulate the economy by the government, we saw a rebound in listed equities. We saw a resilient post-COVID recovery heading into 2021. But at the start of 2022, we also we saw the onset of the Russia-Ukraine conflict, which triggered foreign portfolio outflows from emerging and frontier markets, to which Kenya was not an exception. But coming into 2022, also we've seen 2023 rather, we've seen interest rates begin to rise, and that has also weighed adversely on equities performance. However, when we tend to focus our attention on stock indices, my core thesis is that it can mask divergent performance across sectors. As such, we really advise that it's wise for investors to dig deeper to be able to find opportunities for growth. Yet be that as it may, we see the decline of the NASI presenting fresh opportunities to take up fundamentally sound counters at sharply discounted levels. So if you look at the index in the previous slide, it cannot show you that there are top gainers that have gained well over 100% year to date, as evidenced by the top 5 gainers 2023. We've seen some select stocks in the agriculture sector and also the energy sector really outperform in the year, largely driven by improved weather patterns for the agriculture counters. And also we've seen energy sector counters outperform owing to windfall gains to the sector. On the flip side, we've seen some select counters, some select blue chips such as Safaricom and KCB feature in the top losers for this year. This, of course, owes to the macroeconomic headwinds, notably the elevated inflationary pressures and also the rising interest rate environment. However, looking forward, we expect an easing of inflationary pressures. Inflation is rather benign in 2023, and we expect that to hold in 2024, and we expect now that to stimulate a recovery. So what are some of the investment strategies a prudent investor can adopt in the Nairobi Securities Exchange? Firstly, we're saying stay defensive. So how do you stay defensive? You stay defensive by building an equities portfolio that is well diversified across sectors. And the effect of this is that it helps you lower your overall risk exposure. The second strategy is that we recommend investors consider value and dividend yielding counters. So as right now we are emerging from an economic slowdown and we are hopeful of a mild recovery in 2024, this is the best time, we believe, for investors to position themselves in value and dividend yielding counters. That strategy is that we're saying buy the dip. So right now we're seeing most counters trade at fractions of their book value, very discounted, offering investors opportunities to acquire fundamentally sound counters at discounted levels, and also to exercise dollar cost averaging. Speaking of dividend yielding counters, we've seen what are some of the top dividend yielding stocks in 2023. Well, when you look at the top 10 list on your screen, you're seeing a well-diversified mix of counters from energy sector, banking sector, manufacturing sector, feature prominently as part of your dividend yields. So you taking up some of these counters means you're able to, first of all, diversify your portfolio while earning overall competitive yields. Some of the top dividend yields go as high as 17.7% by Umeme Limited, followed by Standard Chartered Bank Kenya, whose dividend yield effectively stands at 14.12%. Lastly, as I give you a suite of 2024 stock recommendations from my analysis, we are really bullish on some of the agriculture sector counters, such as Kakuzi, Kapchorwa, and Williamson Tea, largely driven by solid or resilient weather patterns, coupled with tailwind effects from the exchange rate direction we're seeing it taking. However, coming on to automobile sector, we are rather neutral, we're saying hold, as we wait for recovery in the general economy. When you come to banking sector, we've seen banks report, even from their Q3 earnings, the earnings momentum remains pretty rock solid. Returns on equity remain in strong double digits, driven by upward rate pricing and also organic growth across regional subsidiaries. So we have a number of buy recommendations in the banking sector, as you may see. Crossing over to the commercial and services, we're still looking up at, we're seeing a number of companies report profit warnings in the year because of the macroeconomic headwinds. Such are recommending hold and sell recommendations in that sector. Construction also, we have a number of hold recommendations. But in the energy sector, we have a couple of buy recommendations, largely because Kengen PLC and Umeme Limited, because they've been trading at above average returns on equity, and also the dividend yields remain well above industry averages. Insurance sector, we also have a couple of recommendations, notably CIC Insurance and Jubilee Holdings. Expect insurance counters with a skewed exposure to long-term insurance to outperform. Crossing to manufacturing, We also are bullish on British American Tobacco Kenya and Kabacid. And lastly, in the telecom sector, we're also bullish on Safaricom for 2024. So for more information, you can reach out to research@aibaccess.com so that you may be able to get in-depth information. Also, you can visit our website, aibaccessafrica.com, for more information. In our research tab, we have company-specific reports, daily research briefs, weekly briefs, price lists. You can even look at fixed income notes and quarterly macroeconomic reports, among others. Also, you can download our award-winning DigiTrader app so that you can be able to open your CDSC trading account online and invest in stocks online. You can also easily have a snapshot of your portfolio and even contact or reach out to our customer care executives via your mobile device. It's easy to navigate, it's user-friendly, minimal paperwork needed, and they're also very competitive trading fees as well. So I think I can sign off my presentation with this quote: the best time to plant a tree was 20 years ago. The second best time is today. Thank you so much.
Thank you, thank you, thank you. Let's give him an applause. I mean, come on, let's give him a thumbs up. I can see love. Oh my God, that's fantastic, fantastic. And I'm seeing a question. If the presentation will be shared, I think, Ronnie, I think you will be able to share that presentation with the audience. And also the recording.
Yes.
The recording of this presentation will actually be shared with everyone. And you notice we have Steve Atema, who's our director in the background, making sure that everything's running all right. Thank you, Steve, and he'll answer your questions there. Now, Ronnie, not to put you on the spot, but one of the questions that we get often is, okay, obviously right now we understand it's a bearish market. If you look what's happening globally, the Russia-Ukraine war, if you look at the inflation, the cost of living, the new taxes, you're seeing that a lot of the company's share price are not really volatile. They're not really moving like they should. And the question we get often is, and as a researcher, when do you see this bearish market lasting? When do you think we'll come to recovery and we'll start seeing like Safaricom going up, much higher than it's going now? In your own view, when do you see that changing, Ronnie?
Thank you for your question, Conrad. Well, looking at the equities performance, it is true, as you point out, that indeed we've seen a lot of counters, even the top leading in terms of market share counters register either flatlining or a decline in performance. And this largely follows from the macroeconomic forces that have shaped this year. And I think the reversal will come, or is largely hinged upon when we'll start to see interest rates begin to decline. Looking at offshore markets, notably the US market, we're seeing them signal that we expect rates to remain higher for longer. And while this remains true, it highlights the appeal of US denominated assets. However, we've also seen, because of the changing tax landscape in the Kenyan environment, we're just seeing consumers kind of adjust their real wages to the rising prices in the economy. But be that as it may, we're seeing the consumer remain resilient even as we head into 2024. And also in the interest rate scenario, we expect interest rates to begin to peak and taper at around mid-2024. And that should lead to a rebound in the equities performance from around early, either to first quarter or mid-2024. That's my base case scenario.
Okay, thank you. And now let me switch and talk to, let me put Justice NSE. You've had the information from Ronnie, painting the picture of the market. And so my question to you is, what products can investors use to manage their portfolio, especially given this economic uncertainty? What can you tell us for investors? Thank you.
All right, thank you, Conrad. Also, good work with the presentation, Ronnie. So at the exchange, because we are the providers of this marketplace for people to invest to, and investors to come and take up these positions. We also offer a variety of other products other than just the shares that allow investors to be able to manage that risk and be able to ensure that their investments are protected even during these tough economic times. So about 4 years ago, the exchange did launch our derivative market. So we were the second exchange in Africa to be able to offer this service. And this allows investors to participate in the equities market at a fraction of the cost. So the derivatives allow investors to be able to hedge. For example, if you own Safaricom shares and you are concerned that the price of those shares can depreciate, then you can be able to invest in the Safaricom derivative that allows you to then hedge and protect the value of that investment. If you are also optimistic or pessimistic about the price movements in the market, you can also be able to use the derivatives as an investment tool. They are associated with a higher level of risk. However, that risk can also be translated into a higher level of return compared to owning the shares. And lastly, the derivatives allows you to be able to invest in what we call a two-way market. That way, if prices are coming down, you can be able to make money from what we call taking up a short position in the market and on those specific counters. So there's quite a variety of ways in which the derivatives market and the derivative product can be able to use to hedge your investments within the market. Back to you, Conrad.
All right, thanks a lot. And Justice, you talk about the derivatives market. What can you tell for those of us that are quite new to the derivatives market? Is it for sophisticated investors, or can anyone participate in derivatives? Because when you hear the word derivatives, it's like, ooh, it's a bit scary. So what would you tell us?
Yes, I mean, it's a long word, but it's actually quite a relatively simple product. So anybody can be able to invest in the derivative products. To be able to do that, you'd need to open a derivatives account with your respective brokers, or to the licensed derivatives brokers in our market. I know some of them are joining us on this call, so I'm sure Ronnie, Rina, and Samantha can also be able to give you a bit of insight on how you can be able to get in touch with them and be able to open that account. So it's really open to any form of investor, whether you're sophisticated, whether it's the first time you're doing it. Yeah.
All right, thank you very much. And now let's move on to Rina. Rina, you've been passionate about investor awareness, and you've done a lot of work on social media. And you can see the passion. You have a media channel that you have different regulators, you have different people coming to talk. In this economic times globally, what tips can you give us? Because I know you've interacted a lot in this space. What tips can you give us so that we can actually make money, basically? Over to you, Nina.
Thank you, Conrad. Yeah, so I think one of the things that happens in a difficult economic environment is people get afraid and they decide not to do anything, keep their money in savings. And that's the last thing I would advise you to do. I think the first thing I'd say is budget and track your expenses so that you know where every single dollar, pound, euro, shilling is going. And then once you know where your money is going, analyze and figure out where can I actually cut out so that then I can have some extra money to then invest. So I think a big problem that people have is that they make a decision based on what is ideal, and they have an ideal budget, but it's not a realistic one. So you want to have a practical one that includes also money for some non-essential expenses that you enjoy doing, so that it's a more practical budget, but one that then helps you figure out what can I cut out. Maybe it's subscriptions that you'll cut out, or maybe it's cutting out on food. So I plan my meals in a certain way so that then my groceries are cheaper. And that sort of thing. The other thing that you must do in a season of uncertainty is have an emergency fund. So an emergency fund is money that you put aside that you can then tap into when something unexpected suddenly happens. So, I'm just reminded, 2 days ago, we were on a trip. I was coming back to Nairobi and a pebble hit my windscreen and I have to get it replaced. Fortunately, there's insurance and that should be fine. But if something like that happens that is unexpected, you need to have some money somewhere so that you're not having to sell an asset to meet that kind of need. So if you don't have an emergency fund, that's cash invested in a place such as an account with a bank or a money market fund that is easily accessible when an emergency happens, that's the first place to begin, especially now. The other thing that causes a lot of risk is debt. So please focus on paying down debt if you're in debt, because in a season of uncertainty, interest rates are likely to go up. And then even the uncertainty of our own incomes, whether you're in business or whether you're employed, is challenged, right? So focus on paying down debt as much as possible. Another tip I would share is we cannot live on one income. It's just not advisable. And we always say that one income is too close to none. So please try and seek additional income streams. Those additional income streams, especially if you're employed, would need to be passive, passive, so to speak. So it could be investments or it could be additional work. Maybe you work part-time and you get a certain amount of money. So how can you add an additional job? I recognize our time is limited, and so passive income streams are great. So you can get interest income from investing in things like bonds. We have one that is almost 18% tax-free that was issued the other day. There's dividend income. We've seen what Ronnie has showed us, from 10% to 17%. Of course, there's those that are lower in terms of returns, but in this season, I'd actually recommend that your key strategy for stocks be a dividend income one, so that you're looking for dividend income. You can actually make 20-30% in a year just from dividends. Just so that if we have some on the call who may not be aware, dividends come from investing in shares. And when you invest in shares, you become a part owner in that company. And the benefits of that is you can either get a dividend income when the company shares its profits, or the price of that stock goes up from X price to that price. Capital gains in this season, to be honest, will be difficult. So don't invest chasing capital gains in the short term. I would suggest if you're looking for capital gains, have a long-term view. But when you're looking for investing in stocks at the moment, a dividend income strategy would be most advisable. Then there's others like rental income that we all know. There's capital gains, I've mentioned about that. So find ways to earn additional income. Please continually invest. Don't say, I'm not going to invest because times are tough or because, there's a lot of risk. Risk will always be there. The thing you must do is then invest wisely. There's a term that Ronnie used, diversification, right? That just means have a mix of different assets that you're investing in, not just one. Invest in real estate, it's okay, but also invest in a money market fund, invest in bonds, invest in equities, but obviously wisely. And you're not alone on this journey. We are available to speak to different people. And we have teams, all of us here. You can speak to us and you will get guidance on what you can invest in and how that is based on your goals and your needs. And then just keep track of your investments. Don't forget you bought shares or you bought land or you bought whatever it is that you purchased. Don't forget about it and wait 10 years. You have to keep track of what's going on. Where are my titles? How is it performing? What decision do I need to make? Should I be selling? Should I be buying more? And so on. Finally, my last 2 tips is one, my second last is just avoid social comparison. This thing of, oh, these guys are traveling, or these ones are buying and upgrading to new cars. You go on Instagram and it's like, wow, do I have a life? Just ignore all of that. Decide what it is that you want to do. Put your head down and focus on that. And then the last thing is keep hope alive. I know usually when, we're in a tough environment, you can kind of lose hope and feel like everything is crumbling, nothing is working. Find ways to just keep hope alive because it's going to work out in the end. This is part of life. Life is about challenges and overcoming those challenges, and there's cycles all through life. So find ways to be able to, to keep hope alive. That's it from me. Thank you.
All right, thank you. I like that. Keep hope alive. I'm sold. I'm sold. And actually, Rena, there's a question about the infrastructure bond, the one that the no tax, and is it still open? Do you know if it's still open?
I'm sorry, please say that again, Conrad.
Yes, there's a question from I believe from Wanjiru about the infrastructure bond that you were talking about, the one that you pay no
Yes.
tax. Is it still open?
Yes. It is still open. It is still open. They're closing on the 6th of December. Is it advisable? Okay, maybe just I can't quite see the charts.
Okay,
Maybe
okay,
just
that's
read
fine.
them out for me.
Yes, there's actually, okay, there's a question about, is it advisable if someone has dollars to convert them to Kenya shillings to invest in government bonds at the moment?
So again, it depends on what your strategy is. If you will have Kenya shilling expenditure, then it's okay. You can invest in Kenya shillings. I also suggest that you invest in US dollars or in hard currency, not necessarily just in dollars, but in euros or whatever currency that you are in, because we are in an emerging economy, actually frontier market. And so with third world countries, the constant is, in fact, all currencies depreciate, but the rate of depreciation of our currency is faster than others. Kenya for a long time was one of the most stable currencies in all of Africa. Unfortunately, that has changed in the recent past. And so don't convert all your money and invest in Kenya. My suggestion would be please invest in dollars, but also convert some and invest in bonds here because the rates are attractive. There's no tax. And if you will have Kenya expenditure, please do. One of the things about Diaspora, Conrad, is that they do have Kenya expenditure. You have family that you're supporting, you have people you're sending money to, and instead of always removing money from your wallet or from your bank to keep sending money, invest it in a bond. And every so often, you will be able to send money to your family from passive income that you're making as opposed to from your active income. So that's one of the things I'd say, invest that money, yes, in Kenya shillings, yes, in an interest or tax-free opportunity that is high in interest, or even dividends. You're earning 17, 10, 11%. You can buy a stock and pay your family through dividends. So those are different ways you can think about supporting your family through passive income as opposed to using your active income.
Yeah, thanks a lot. And I think what you're saying is really important. Right now with the depressed Kenya shilling, if you've got the dollars, you can actually, it'll stretch you further. You can actually buy more capital markets products. And folks, if you look at the bond, the interest rates, I mean, 18%, I'm not sure where else in the world you're getting it. In the US, I think it's about 2 or 3%. In the UK, maybe like 7 in Nigeria. I mean, you can't get 80%. And let me also explain to you that I think the Kenyan government, our credit rating is fantastic. We will never default. I know you've heard stories about what happened in Ghana, but we're not going that route. We're doing really well. But Rina, first of all, sorry about your windscreen. The screen. But now you talked about the emergency fund. In this day and age and the cost of living, is there a formula as to how much you should have in the bank account? Like, what's the formula? Is it like 3 months of pay? What's an emergency fund?
Okay, great question. So what you do is you need to know how much you spend. It's not your earnings that you use to calculate your emergency fund, but your expenditure. Because the purpose for the emergency fund is if my income doesn't come in when I expect it to, or it gets cut down, or something impacts it, I want to be able to meet my core important expenses. So what's that number? How much are you spending every month? Is it $1,000? Is it 1,500? Whatever that number is. And then make sure that you save towards having 6 months of your emergency fund. So it takes time. Right? It takes time. You can't just decide I'll do nothing else and just work on my emergency fund. Start with getting that 1,500 first, at least 1 month of your expenditure, and then work towards slowly over a year and a half, however long it's going to take you. But as you get your income, decide, a small percentage of this, maybe 10% is going to go towards my emergency fund, even as I continue investing in different opportunities.
Okay, thank you very much. And I think there's a lot of good information. I'll just quickly respond to some 3 questions that we're getting. There's a question about what Sharia compliant products are available for investors. Do you have a Sukuk bond approved? Very good question, because ladies and gentlemen, about a month and a half ago, Kenya we approved the very first Sukuk bond called the Lindsay bond, and that was floated, and it's for a housing project. So we do have that, and even in collective investment schemes, we have some Sharia compliant CISs. So yes, we do have that. There's a question about when do we expect another infrastructure bond? That's normally advertised in the paper. So I don't know if Rina know when the next infrastructure bond is, but I think that's something that the government does quite often. The process of buying an infrastructure bond, you'll be hearing more about this a bit later, but now there's a new product, or actually an online tool called the DOE CSD. It's a way that you can actually go into the system and you can actually purchase bonds, but we'll be talking more about that. Okay, so thank you very much, Lena. And Steve Atema, you could actually be answering any other question that I may have missed from the audience. Now, let me switch and now come to the next panel, where we'll have Johnson, Mumo, Samantha, and Kamunyu. Okay, so let me start with the first question. You've heard the first panel talking about the economy, tips on investing. In your view, and we'll start with Johnson. In your view, how can the diaspora make money right now? What's the easiest in terms of capital markets? Like, what's the how can they take advantage of given the current situation? Let me start with you, Johnson.
Thank you. So as at ABC Capital, our view is we invest alongside we try to take advantage of themes. So the themes that we are seeing right now is so the shilling is weakening against the dollar. So what does that mean? That means that we can take you can take positions in companies that earn in dollars, for example, exporters such as Williamson Tea and Kakuzi to an extent, Captura, for example. Geographically well diversified institutions, Equity Bank comes to mind. So that's one theme that we're thinking people should take advantage of. The other theme is dividend. So dividend yields are quite high, obviously tracking higher interest rates and of course depressing share prices. But again, dividend yields are high. So imagine buying a bond that can appreciate in price. So if you buy something that is yielding 12, 13, 14% today and has a potential of getting you capital gains, even if it's not this year or next year, it's still a very interesting opportunity, I would think. So it's those two themes that we've identified as at now that people will take advantage of.
Okay, thanks a lot. And I'll ask Mumo the same question. How can diaspora make money at this moment, in your view? I want to hear each of your personal views on making money.
Thanks, Conrad. I think that's a very good question. I think one of the things that really I tend to think about is, first of all, before I do the how, is the why. And an important factor for me, as I was saying at the beginning of the call, is I am a firm proponent of generational wealth transfer. So I think it's very important, and this is a matter of personal, even as my faith teaches me, that I'm a steward of the resources that I'm allowed to have access to in this lifetime. And it's my responsibility to use them well and transfer them to the next generation. So before I cover the how, I think the why is very important. It's not just about the Lamborghinis and the big houses and everything. It's leaving an inheritance and a better place for the next generation and for the country. That said, I think I would like to echo what Rina said. It's very important, first of all, to get the right information from the right people. Without that, you'll be flying blind and you'll make a lot of mistakes that ideally you should not make, because we have the people with the right information and the tools to help us. An important one for me is we have embraced technology as CDSE and the market. And one of the key avenues that we have is an app called Dosika. Dosika, if you're not using it, you're in like 2017, you're behind. Because this app solves one very simple problem. You can open a CDS account and trade in one platform from your mobile phone. So it allows you to get access to data that previously was not available to retail investors. We're talking very technical data like earnings per share, dividend yield, etc. So the conversation now moves from what is XYZ to asking your investment advisor or your broker, how can I take advantage of the numbers I'm seeing on this platform? So I think I would want just to echo that we really want people to access this platform and use it. It does not belong to CDSE, it belongs to the market. It's a market initiative. by CDSE, NSE, CMA, stockbrokers, and all the partners in the market. So it's very important to access this platform, get the data, get live feeds on the prices and the kind of technical analysis you would typically have to pay a lot of money for. Then from there, it makes the conversation with your advisor very, very simple in terms of what to buy or what to sell. Yeah, those are my 2 cents, Conrad.
All right, thanks a lot. And you said something, Dosika. Can anyone from wherever I am, can I just log in and start buying shares to the broker? How does that work? That's fascinating.
Excellent question. So yes, it's called Dosika, DOSIKAA. Available on Android and Apple's, what is it called? The iOS store. So you can access it from anywhere. You don't have to be necessarily in Kenya. You can access it from anywhere in the world. You register on the platform. Then if you don't have a CDS account, you can open one or link your existing CDS account with your broker. If your broker is not currently there, then we have around 6 brokers already on this platform, and you can trade through any one of them. You can actually have multiple accounts with different brokers. So yes, it's accessible from anywhere in the world. And if you have any challenges, you can reach out to anyone in CDSE, CMA, the Capital Markets Authority, any of the stockbrokers, and they'll direct you on what to do in terms of accessing the platform. Yeah.
Fantastic. So for the 200 people listening, please go and download the Dosika, DOSIKAA, and start trading. It's as easy as that. Fantastic. And then one last serious question, Mumo. Did you say you have a Lamborghini?
I wish.
I thought I heard you saying you have a Lamborghini. How does CDSC employee afford a Lamborghini? But anyway, I'll let you off the hook on that one.
Thank you. Not yet there. Maybe someday.
One day.
Good one.
Okay, Samantha. What tips can you share with us? How can Diaspora make money in your view in this economy?
Thank you for that question, Conrad. Well, there are many ways for the diaspora to make money currently. So as was said, there are 2 ways to make money. Number one, you either look at dividends or you're looking at capital gains. And if you're looking at dividend, this is a good time. I'll give you just a short example. So for instance, StanChart just announced an interim dividend. It's closing on the 14th, and the dividend will be paid on the 28th. So guys, you have 28 days to make some good money. To make some good money from that particular stock. To make some good money from that particular stock. And StanChart is one of those stocks that's giving very good dividend. Last year's dividend yield was at 13.75%. We think that it will continue to give at the same rate. The other thing is you can look at any banking stocks right now. Most of them are giving very good dividends. So this is a good time to buy stocks for dividend. It is also a good time to buy stocks for the long term because the valuations have never been this low. So because the valuations are so low, this is a good time to buy because the prices have not been this low. And it's going to be very, very difficult for anyone to try and track the stock prices. Sorry, I see somebody is saying, can you, am I still echoing?
Yes, I can hear you, but unfortunately there's a bit of an echo in the background. I'm not sure if...
Okay. Okay, can you hear me now? Is there an echo?
No, perfect. Continue.
Okay, so I'm sorry let me just repeat myself. I was saying there are 2 reasons for you to buy stocks in the stock market. Number one, you can be buying it for capital appreciation or you can be buying it for dividend yield. So number one is anyone who wants to invest in the stock market should ideally have a long-term view. But if you do not want to have a long-term view, then you can say, I'm going to come in to buy for dividend. And I was giving you a good example where I was saying that Stanchart has declared an interim dividend of 6 shillings and the book closure is on the 14th of December. And this dividend is going to be paid on the 28th of December. So that's one quick way for you to make money. We're not yet on the 14th, and so you can buy money. And again, Stanchart, last year's dividend yield was at 13.75. So even if you want to keep the stock for longer, it's also a good time. It's also currently at a very low valuation of about 160 shillings per stock. But there are other banking stocks that you can also look at. You can look at CoBank, you can look at Equity Bank, any of the other stocks, look at what their dividend yield is. And now this is a good time because the valuations have not been this low. I know we usually scared of buying stocks when the market is this low, but this is actually the best time for you to buy because when the market turns, you may not be able to catch it. Yeah. That's for if you want to buy dividend stocks. But if you're looking to buy for the long term and you can slowly begin to accumulate or build your portfolio, then also this is a good time for you to do, for you to then begin to do it. However, if that risk for you is a bit much, then you can think about you can think about investing in the financial, in other financial markets. So things like the infrastructure bond that was just released by the government. So for instance, if you put 100,000 shillings, every 6 months, you will be getting about 9,000 shillings. And if you have any obligations that you do here every 6 months, then you can request that coupon payment when it's made to your bank account here, then you can just honor that. Again, if it's about 500,000, you're looking at a coupon payment of about 45,000 every 6 months. So you get about 90,000 a year. And it gets even better. If you have 1 million shillings, then you're looking at a coupon payment of about 180,000 a year, which will be paid to you twice a year. So there are opportunities also in the fixed income space, and you do not have to hold the bonds to maturity. You can always trade them. However, there's the risk of interest rates. Depending on how interest rates move, then you may not find somebody interested in your bond if you bought a bond at say 18% and interests go to 27. So it's also important to know when I'm buying a bond, am I buying it, to enjoy my coupon payments and wait for maturity? For the recently just concluded infrastructure bond, yes, it closed, but then there's a tap sale that has been reopened. So please speak to us at Kingdom Securities. We'll be able to assist you go through this whole process and just be able to buy your bond. So again, when you go onto Dosika, you can choose any of the stockbrokers in this on this call, and they'll be able to help you. But at a KSL, we also have our own trader app, and again, you can just go on either your Android devices or your Apple devices or any devices that you have, and you look for the KSL trader app. KSL stands for Kingdom Securities Limited. Download the app today and use the same login details that just put, as long as you have a CDS account, you can be able to get the app. And even if you do not have a CDS account, please then email to us and say, this is what I would like to buy, but you can be able to just generally self-register. Credit funds into this particular account, and you can be able to trade for yourself as long as the market is open. So basically, I would encourage you not to shy away from the market. Please do come into the market. There's something for you, whether you go into the fixed income space or you come into the equity space. Somebody asked, is it worth it to convert my dollars into shillings to invest in Kenya? Well, the simple answer can be yes and no. Yes, for diversification, number one. Number two, you have the opportunity now. You're using less dollars that will take you a little further. So if you can buy more stocks with the $1 that you could have bought same time last year, why not? If you have obligations in the KS, why not? If you are investing also because you intend to come back home, then why not? There are very many exciting opportunities. And for Kenyans in the diaspora, if you want to participate in the development of the economy of the country where you're from, there is no better way than for you to participate in the financial markets. Thank you.
All right, thank you. Thank you very much. And you've made some very interesting points. I think they're really fascinating. Now, I'll ask you the same question. Now, you're talking about this is a good time to buy shares because they're depressed. They say buy when it's low and sell when it's high. In your view, Samantha, how long do you think this bearish market will last? Because some people are afraid that you can buy shares right now and they'll be so depressed for the next 2-3 years, and you're stuck with this low value share, and then the company's not paying dividends. So what would you advise that person who's a bit concerned?
Okay, in terms of the concern of how long the market is going to be depressed, I think we're going to continue to see this for a little bit longer. I would say until at least until June of next year. Once the government is able to pay the $2 billion of the Eurobond, then you will see the market turn. However, we cannot say that's the exact time, because remember, also foreigners have left our markets because they have seen better opportunities where they're from, because the interest rate environment is not just in the Kenyan market. The thing is that these particular companies are all companies that are doing well. They are reporting a profit. So if you're in it for the long haul, I would say begin to accumulate slowly because it's difficult to time. So yes, today Stanchart may be at 160 shillings. I don't have a crystal ball to tell you that it will not be 145 in March. Yeah, but I also don't have a crystal ball to tell you that it will not be 180. But I do know that it is below the valuation. I do know there are people who bought Stanchart at 263 shillings some time back. So it's a good opportunity for you then to either average your costs down, but then have a long-term view and say, I'm buying these stocks for what? If you're buying for capital appreciation, then this is a good time because you can start to accumulate slowly and you have at least another 6 months of some bearishness of the market. Then after that, the market can turn. But Conrad, sometimes the markets are this low, not just because of the fundamentals. Sometimes it's also a lot about sentiment. Yeah, so we don't know when the sentiment is also going to turn. So I would say allocate your capital wisely. So diversify. So you can have, if you feel that it's too risky for you and you'll be having nightmares, and that's fine. Then just go to the fixed income space. We have bonds that are giving you such good interest rates, and even better, you have infrastructure bonds, which are tax-free. We all know how nice it is to receive something that's tax-free in this particular environment. But what I can say is that there's opportunities for both.
Okay, thank you very much. And by the way, every time I go to the grocery store, I get nightmares. Just the price of things that are there is quite amazing. But thank you so much, Samantha. Now, we have the regulator in the house. We have Communion Njoroge. As the regulator, what would you tell the diaspora? How can diaspora make some money? And I know you have a lot of experience in that area. So maybe what can you tell us about making money through capital markets?
Thank you very much, Conrad, for that question. The good thing about comment, in the end, you more or less appear like you're summarizing what people are saying. I agree with the speakers who have spoken before me that indeed you can actually be able to make money within the market. And maybe I just talk about a few things just in terms of just adding my voice into what has been said. One, people need to get information. Even as you come to the market, you find that there are a range of products. There will be bonds, there will be equities, there will be just really going into the money market T-bills. And the thing is that among all these products, there is a return risk profile. So you need to understand your risk. You need to understand how much risk you can take. We don't want you getting into the market and being unable to deal with it and getting high blood pressure and stuff like that. So I'll understand your risk, and then after that, then you're able to match your risk with your profile. I think that's critical. Number two, and I think Samantha has talked about it, is the issue of making sure that you diversify, so that you are in. I mean, you maybe have some money within the bonds market or the fixed income market, and then also you have some money within the equities market, so that even as you're trying to come into this come into the space of equities and hoping that the market is going to improve, you're not too worried because you have some other money that is dealing with the issue of safety and security of your investment. The other thing is really to go along, so that you're not thinking about getting in today and in about a month you're getting back your money. So in the capital market, we're talking about a year plus, and it's been seen that 3 years, going forward, then you're able to appear to be making your money. I think Momo spoke about the fact that we have technology. I think that's key, especially for the diaspora. I think currently now you have a way of actually coming to the market through technology. We have this capital market app. What it does is that if you go into it, you're able to access online platforms of various stockbrokers and fund managers and people who are actually in the market. And in the event that you wanted to make your trades, then you can actually do that through those portals. But besides that, then we have the Dosika app. And I just want to repeat that word, Dosika app. You can go to App Store for those of you who have iPhones and iPads. And you can go to Play Store for the Android, like myself and Conrad, to be able to download the app, the Dosika app, and then you're able to follow the prompting, and then you're able to open a CDS account. And you put in some money, and you're able to begin to invest within the market. You find that we've been talking about shares and bonds, but the other products and what we're planning to do is maybe to have a series. I mean, let's understand this and see what can come out of the market. But I mean, beyond that, then we will talk about REITs, we'll talk about ETFs and different products. The other thing I just want to mention, if I was to use some economics, maybe just the issue around the fact that maybe the market will start getting recovering around June. And you sit here and wait to invest in June, you're not going to make any more because economic agents form perceptions. And so towards that date of June, they'll start now, looking forward to that. And you find increasingly people start getting into the investment arena when they are hoping that the market is going to turn around quickly. So the person who is going to benefit is the guy who actually get into the market now. Because by the time now all these people are beginning to see some sense of a turnaround, and then they'll start coming to the market, the demand increases, and then what happens is that you find that the price also goes up. So you find the difference between what you're going to be using to buy these shares, to buy to come into the market, and the difference you actually get currently if you were to get to the market now, you find it is quite high. Currently, we're talking about Safaricom at about Kenya shillings 14. Just the other day, we were talking about it at around 40. Even if you're just to say we are hoping that it will go back to that, I think you're looking at someone being able to make money threefold. So I think in short, what we're saying is that it's a market you can actually come to. It's a market that is easy to come to, but and I think from the CMA, what we can promise, one is order in the market. We'll continue ensuring that there is order within the market. And number two, it is really technology and innovation in terms of trying to respond to the needs of Kenyans. Like I said earlier, We regulate the stockbrokers, the fund managers, and no intermediaries who operate within the market. But besides that, we also regulate and approve all offerings that are coming to market. So ours is just to make sure that even as these offerings come to market, they are solid and they have been able to disclose all the information they need to disclose so that investors can make the correct decisions. And finally, it's just really investor protection. One, by way of making sure that we continue informing investors, and number two, also just make sure that we protect them by getting these bad guys into the market. Thank you very much, Gordon.
You're right. Thank you. Thank you. And I like the end. We'll protect you by getting the bad guys out of the market. You know, that's like, whoa. And that's investor protection. We have a lot that's done at CMA. So thank you, Kamunyu. Now, since you talked about technology and innovation, Johnson, let me ask you how technology and innovation is creating more access to the market. What's your view on how we're doing in Kenya in terms of technology and innovation in capital markets?
When it comes to tech and innovation, I think Kenya has done very well, and hats off to NSE, who have, in conjunction with brokers, been at the forefront of driving the tech side of things. So it's now much easier to transact compared to when I first joined the market in 2000. In 2000, it was open cry in the market, on the floor, I think, or with Rina there at some point. But now you can trade from the comfort of your house. I think where we need just a bit of support is how to bring, how banks can, support integrating with especially the diaspora. And I think us at ABC Group, we are trying very hard to do that. We've got an active diaspora banking solution, and we're able to reach, I think, Middle East and the North America. I'm not quite sure about the rest, but anybody outside those areas can reach out to us through info@abccapital.co.ke, and we'll see how we can support. But essentially, what we've tried to do is put power into the hands of the investor from wherever they are, and we are always available for discussions to brainstorm ideas, because at the end of the day, stock market is about ideas and perspective and information, and we can help together. We can synthesize information and you can come up with your own investment theme or your investment strategy or your investment outlook, and then act on that on your own, because we can through ABC Capital platforms, through the web or through apps, we can assist you participate in the local capital markets.
Okay, thanks a lot. Now, Johnson, you mentioned you joined the market in 2000. You're looking very young. You should be having white hair, like a white beard like mine. So I'm going to investigate further. Yeah, but and Kamunyu, there's a question for you, Kamunyu. Where can we get a list of credible, I guess not persons, I guess you mean credible companies that are licensed by CMA? And I think you talked about our CMA app and stuff like that. There's a question for you. Yes, Kamunyu?
Yeah, thank you very much, Conrad. Yes, indeed, you can actually get our licensees on the CMA app. Once you go into App Store or Play Store, you're able to download our CMA app. But besides that, we also have a website. If you go to our website, you'll be able to get our licensee. They are all there, and even their contact will be there. Thank you.
Yes, and before you go, what is CMA's position on cryptocurrency? I know I've seen you in forums talking about this.
So I think that's a nice one, Conrad. I think when it comes to cryptocurrency, I think what you're saying is that we are asking that people be cautious in that arena. In as much as we are not saying you shouldn't, we're just saying that you should be cautious. It's a very, very risky market. It's a very volatile market. So even as you want to go in there and speculate, just be cautious.
All right, thank you very much. Now moving on, let me get back to you, Mumo. How is CDSC embracing technology, and what are some of the new developments that you have at CDSC?
Thanks, Conrad. So apart from the Dosika platform, which we've really been trying to get the word out on, we have a number of other areas where we use technology. One of them is we have a chatbot that investors can register and sort of interactively get your statements, etc. It's called the Rhino application. So you register and you link your account. But that now we are considering as supplementary to Dosika, because Dosika basically allows you to, in one simple platform, open an account and you're able to trade and see your holdings, etc. So those would be some of the key areas where CDSC is really embracing technology. The other more advanced things that we are doing in the market, we recently, or not so recently, but about a year and a half ago, which is part of what has made Dosika possible, we rolled out an API, which is a fancy word for a technology platform that allows our system to be integrated to other systems like Dosika and other digital channels like what Kingdom are using, and what at some point hopefully we'll get from Johnson and his team. So those would be the key ones that really apply to us as CDSC, trying to use technology to make investors, to make it easy for investors to access the services they need from the CDSC. I submit. Thank you.
All right, thanks a lot. And now coming to you, Samantha, I think I heard you talking about your KSL Trader app. Could you give us some more information? What platforms can you get it? Is it on iOS? Is it on Google Store? And what's the KYC procedure for that to use the app? Thanks.
Thank you, Conrad. So the KSL Trader app is on all versions, the Android versions, and also the iOS versions. So all you need to do is we need your identification, just the normal KYC, just your identification, your CDS number. And if you do not have a CDS number, then it directs you to be able to register for a CDS account. And then once the account is open, you can self-trade. You can actually self-trade. But once you put in your KYC information, then we are linked to a system that is able to verify if it's your national ID number, just to verify that that number or that name is actually accurate, as has been put on the ID. Yes, so that's just it. So it's I posted it on the chat. You can see a picture. So basically, it's both on the Android versions and the iOS versions. But you can also go to Dosika, as has been said by many other panelists. And once you go onto the Dosika app, you then choose your preferred broker, which can be any of the brokers on this call, and then you will still then be able to trade.
All right, thank you very much. And then last but not least, let's come back to the regulator, Kamunyu. Kamunyu, I know you talked about investor protection, but I'm wondering if you can give us a brief on the regulatory environment and what CMA is doing for awareness and investor protection. Thanks.
Thank you very much, Conrad, for that question. Yeah, yes, indeed, the regulator is very active in trying just to make sure that we are responsive enough. And there are a number of things that are actually happening in the market. We are trying to increase offerings within the market by ensuring that we change or make amendments to our public offers regulations, so that even as companies come to market, even as we are trying to see more products coming to the market, then we have that window, so that previously we were saying the only companies that can actually come to market is those that are limited by shares and they have been registered under the Companies Act. We are changing that, and we are making it easier also for companies to come to market. So if there is someone out there in the diaspora in Kenya who wants to bring their farm into the market, it'll become much easier, going forward. So that's one of the things that we're trying to do, and just to make sure that there are, further disclosures for companies that are coming to markets. So even as investors are coming, they have more information about, then I'm coming to buy this particular share. What is it like, and what do I expect? What is the dividend payment profile, and all that kind of stuff. So we're trying to make that easier. Then we're also making changes within the collective investment schemes regulations. Primarily, again, also to increase. So previously, there was a bit of vanillaness, or just just one size fits all in terms of who can actually come in and start CIS, and what nature would it take. We are trying to bring in alternative, sort of offering for CISs. So again, there will be some changes there, and very soon we'll be announcing, the gazettement of regulations. Number three, I think it's to do with the fact that we are embracing technology. CMA has been known for a long time being a very innovative regulator. So we are embracing technology even in our regulation, just to acknowledge that, going forward, people can actually come to market through technology. That is through, for example, the Seeker, through platforms like crowdfunding platforms. They can actually come to markets through the CMA app. Just really opening up that platform. We also have, for some people are aware, we have the regulatory sandbox. So that if you would want to come and offer services within the capital market industry, and you don't particularly know where your product would fall within the regulations, you can actually come and test your product through our regulatory sandbox. And then once you get to a point whereby that product becomes something that we are agreeable to and it works, then you can actually go to the mass market. There are issues to do with just trying to ensure that we embrace sustainable finance. That is green financing. There's a whole area that is coming up in terms of people wanting to invest in products that have an end that supports environment, and we are going forward. We are trying to create this space to a great extent, so that people who want to enhance an environment and they want to invest in those kind of products, then they're able to do that. The other thing is that you had, it's announced by government that we're going to see a bit of privatization. We're hoping that most of this will come through the market. And, we are just standing ready so that we're able to offer whatever services that are required. Of course, with partnership with our licensees and other stakeholders who are in this particular area. When it comes to issues to do with protection, I think we've been very loud when it comes to issuing cautionary statements on people who are not doing the right thing in the market. Besides going for them, even as we are doing that, we also try to make sure that at least that information gets out, that there is this person who is offering this product, and we don't think it is regulated, because we really are very keen on people actually investing in a regulated product. Because a lot of people would look at a product and you think you're getting a lot of money, but you've not asked yourself around the issues to do with who regulates this product, and number two, to what extent do I understand what the issue is? So we are very keen on making sure that this information is given to Kenya so that they can actually be able to use it even as go-to-market. We're insisting on alerts even by our intermediaries, just for them to have a mechanism of making sure that, for example, when there's a trade by an investor, then that information should go to the investor, just to make sure that if it's not them who are making that particular trade, then they get that information and they can make an intervention that is required. I think finally, for this instance, I think is the issue of education. I think we believe an educated investor is one that is protected. We try to just make sure that a lot of people understand their responsibility and their rights, even as they invest, so that even as they come to market, they will help us to help them and the rest of the market in terms of making sure that we have people being able to blow the whistle, and we have a whistleblowing portal, whistleblower portal, whereby you can actually come in and report whatever malefficiency or malpractice that you see within the market. And obviously also just enhancing the capacity of the exchange, the Capital Market Authority in just chaperoning the market and trying to make sure that we're able to detect and take action in issues that are happening in the market. And finally, on this, in this case, is also just to make sure that we make sure that we have standardized way of delivery of services in the market, by ensuring that we have a certification program. Anybody who is offering the services in the market and is client facing currently is required to undertake a certain 2 modules that will make sure that once you face this person, you are able to tell that this person will give me services that are homogeneous with what I'm going to get into another broker. And that's why we always say we love our stockbrokers. We can give you the list of them, and then you have to do your due diligence and choose one of them to make sure that you can use them for your trades. Thank you very much, Manu.
Okay, thanks a lot. And before you switch off your camera, there's a question for you, and I'm glad you're an economist. What, in your opinion, of Kenya's economy going the Ghana way? Aha, that's a good one.
That's a very interesting comment. I think the fact that there was a Ghana way, I think, is one of the thing that has really helped Kenya to a large extent, in the sense that everybody is talking about us not going the Ghana way. So I think we can pick lessons from the Ghana situation and make sure that we come out better from the situation we are facing currently. Thank you.
Okay, thank you. And then finally, Bwana Kamunyu, you are a very important man. And ladies and gentlemen, the person in front of you is the chair, you heard me, the chair of the Technical Working Group on Diaspora Remittance and Investments. He was appointed by the Principal Secretary for State Department for Investment Promotion in the Ministry of Investment, Trade and Industry. Bwana Chair, what are some of the things that you're working on for Diaspora in that important committee?
Conrad, I don't know the gentleman you're talking about, but yes, indeed, I'm the chair of this committee. But and I think what we're trying to do is the president has challenged Kenya that we should be able to double the remittances that are coming from abroad, and then move to a figure of 1 trillion in terms of the remittance per year. So, and this is something that we want to do by the year 2027, that we're able to move remittances by diaspora to 1 trillion. But besides that, I think most importantly, in where I come in, is the issues to do with currently out of what comes from the diaspora, it's only 25% of it that comes in as investment. The rest will be remittances that either to help here and there, and philanthropy, and a number of other streams. But key is that 25% is just what comes in as investment, and the call to action is really just to double that and make sure that the diaspora are able to bring in 50% of their remittances to come in as investment. And I think, given some of the things that we are looking at, I think this is achievable. And I think the last target that we have is really to make sure that currently we are told diaspora individuals are limiting on average 5% of their income to Kenya, and the intention is to move that to 10%. If the people in the diaspora can give us just 10% of the income, bring it in here, and not just to help or even just to do philanthropy work, it is really just money that you actually bring in to invest either in portfolio flows to begin with, and maybe later through foreign direct investment. So that's what we are up against, and we are looking at this threefold. One is, what policies do we need to work around? How do we need to enhance the policy environment so that Kenyans are able to come to market, they're able to come to Kenya and be able to invest, in a manner that they're not afraid of, so that they don't have to give their brothers or their relatives and then they come for holiday and they're being shown other houses and they're being told this is what we did, only to see someone else coming into their houses. Yes, so we're hoping that we can be able to also deal with the impediments that are there administratively and also policy-wise, so that even just to provide certain incentives for diaspora to actually be able to come to Kenya and invest. Number two, I think the issue to do with just speaking to the diaspora, just being able to have partnership and collaborations with diaspora, and just understand them more. Sometimes, we sit here in Kenya, we imagine that we know what the diaspora needs, but I think what we're saying in the committee is that there is more than that. I think we need to speak with them, and within the committee, we have leaders of various diaspora associations across the world, Japan, the UK, the US, South Africa. I could go on and on. I mean, we have a number of those chairmen of these other associations, and they are speaking to us and we're speaking to them just to make sure that we have the right information, even as we try to do whatever interventions. And then I think finally is just to create knowledge about the diaspora, and then also the diaspora to understand the country. I think there are a lot of people who have certain perception that are wrong about the country, and I think as a government, we also sometimes we misunderstand the diaspora. Just to really exchange data, and also we do some research, just try to see how we can innovate and just develop products that are able to sort of attract the diaspora to come to Kenya and be able to invest. And not really just coming to invest because they're patriotic, just coming to invest because they have relative in Kenya, but coming to invest for value. Thank you very much, Conrad.
All right, thank you very much indeed. Very, very important, and you'll be hearing more about it in the media and in the CMA site on the great work that you're doing. Ladies and gentlemen, it's about 9:30. Yeah, sorry.
I don't know, Conrad, maybe I need to add that for the diaspora is that I think come next week, we have an event that is going to be led by Kenya Diaspora Alliance. It's starting on Wednesday. So we're going to have it between, I think, Wednesday, Thursday, and Friday. And then the week after, then we have another event that is under the State Department of Diaspora Affairs, under the Ministry of Foreign Affairs. Again, that starts on Wednesday that week. I think it's the 13th, going all the way to the 15th. So those are two very key events. We're going to be hybrid. I mean, you're able to listen in online, and also you can also be able to attend. But as much as possible, if you're going to be Kenya or you're planning to Kenya, please come in and just be able to attend this event. Thank you very much, Conrad. And Conrad is very involved in the second one.
Yeah, thank you very much. Actually, those are two important things that you mentioned in the event. There's the Kenya Diaspora Homecoming Convention next week from the 6th to the 8th at Safari Park. And as Kamuni mentioned, it's also a hybrid. And also the Diaspora Investment Conference from the 13th to the 15th at KICC, which is also a hybrid. You can get a lot more information if you just Google them. You can actually know how to register. Good information. So my good people, thank you so much. It's about 9:34. And if you notice, we've actually been answering your questions as the forum has been going on. That way we've bought some time. So I'm not sure if there's any one or two burning questions before we let the speakers give a parting shot of 1 minute. Any burning question? Steve, are people able to unmute their microphone, Steve?
No, but they can raise their hand to get our attention.
Okay. So let's take, because I'm being cognizant of the time. And so if there's, okay, there's a question from George Kibandi. What is your view on the proposed IPOs? So is he talking about the privatization? And I think that's a good question for perhaps Justus. Maybe you can answer that question about what's your view on the proposed IPOs? And I believe he's talking about the list from the president mentioned of the privatization companies. Over to you, Justus.
Thanks. That's a very good question. So I think we'd also just assume that we are discussing the privatization. So really what the government is trying to do is to unlock the potential of some of these state-owned entities by being able to sell them off to private investors, and ideally also allowing the the Kenyan population to become shareholders of these same companies and get a good stake into the operations and the returns that are coming from these companies. So I think it's a very good initiative that the government is trying to really raise that capital and unlock the value of these companies through the capital markets and through our exchange. So really looking forward to seeing how well that process is achieved.
Okay,
Hope that answers
thank
your
you.
question.
Yes, it does very much. And I'm just responding to one question there. Anyone? Oh, there's a hand up. I can see Steve, you can tell me who's, okay, I can see Angela has got her hand up. I don't know if Steve, can she be unmuted or is she going to type a question? How's it going to work?
No, I've allowed her to speak, so she can
Okay,
go.
so Angela, you have the floor. Okay, Angela, you can unmute and ask your questions, and please let us know who the question is directed to. You can unmute and ask your question, Angela. Okay, I'm not sure if we're having any trouble. Steve. Okay, do we have another question? Maybe you can come back to you, Angela. Any other burning question? Oh, I can see Angela. Okay, go ahead, Angela. Go ahead. Okay, I think we're having a technical issue with Angela. Apologies. I can see you're trying to speak and you've been unmuted, but we can't hear you. Okay, apologies. I think we'll just move on. Any other burning question? You can raise your hand. We can take 2 or 3 questions. Okay. I can see, I'm looking at the chat to see if there's anything here. I see nothing there. Yeah, so again, it's been a lot of good information. It's been very exciting. So I'd like to give each of the speakers, the esteemed panelists, to give us a parting shot of 1 minute. And for now, allow me to start with, let me start with Ronnie. Ronnie, you can give us a parting shot. You know, you gave us a really good presentation. Yeah. Before you go on, there's a hand from Gadumbi. There's a hand raised by. Let's hear the question. Yes, Gathumbi. I think Stephen, you can unmute Gathumbi to ask the question. Okay, are you able to unmute your microphone? Okay, I think we're having challenges there. Perhaps maybe you can type your question as the speakers give a 1 minute parting shot. You can actually type your question because I'm very cognizant of the time. I don't want to keep people past 9:30. So let's go over to Ronnie. You can give us a 1 minute parting shot. Over to you, Ronnie.
Thank you, Conrad. It's been a phenomenal 2 hours engaging session. I've also learned a lot as much as I've been a guest speaker today. Just to encourage our diaspora clientele to please engage our markets. There are challenges, yes, but there are also pockets of opportunity. And if in case you inquire or you need any material assistance or any intel in as far as our capital markets is concerned, you may reach out to me or any of our esteemed panelists. My email address, again, is rchoka@aibaccessafrica.com, and it's been a wonderful evening. Looking forward to engage with you on other forums.
Okay, let's give Ronnie a clap. Come on, give him a what do you call it? A Teams clap, you know, like the thumbs up thing. Let me see the thumb. Show him some love, man. Show him some love. Let's see some reactions. There we go. Thank you. Some claps. Next, let's have Johnson Derry from ABC Capital. Give us your parting shot.
Yes. From us here at ABC Capital, we think that whereas everybody else would probably be seeing problems, we see opportunity. So, for example, if you are willing to buy Safaricom at 40 shillings a share 2 years ago, 1 year ago, and now it's trading at 16. Wouldn't you consider that a bargain? If we were looking at cars and you've got your Lamborghini there at $200,000, but today you can, for whatever reason, access it for $100,000, isn't that a bargain? So that's how we're looking at it. I think they're fantastic opportunities. Also look out for interesting transactions like what we're seeing with Bamburi. I think we'll see a little bit more as the economy reorganizes itself. So those will be opportunities we're looking at again. Thank you for having us. Thank you.
All right, thank you very much. Let's give Johnson a round of applause. Give him some thumbs up. Show him some love, Johnson. Johnson, good job. Very good information. Let's go to Justus from Nairobi Securities Exchange. Give us a parting shot.
All right. So first of all, thank you to everyone who's taken time to join us for this discussion today. Conrad, very well moderated. Thank you for that. Maybe what I'd say is to encourage all our listeners in Kenya and around the world is that I think it's time for us to be able to take charge of our own market. From the analysis that Ronnie gave us, we've seen quite a bit of a shift towards, a decline in sum and value of some of these listed products. And this is largely attributed to trading activity being largely driven by foreign investors. I think it is really about time that we took charge of our own market and we took ownership of our own market because the return potential is definitely there and there's a lot of opportunity for money to be made, which is really a big principle of why we have capital markets and how we have an exchange. So I really hope that all the questions of our listeners have been answered. And if you have any other questions, please feel free to reach out to any of the institutions, even the exchange as well, through our website. And I really hope that you have a very fruitful and prosperous investment journey in the year ahead. Thank you.
All right, thank you very much. A round of applause for Justus. Come on, show Justus some love. And then moving on, the man who owns a Lamborghini but has refused to admit it, Mumo. Give us a parting shot.
Oh man. Okay. Just to say thanks. I think Conrad, you've done an excellent job. Thank you very much. The panelists who've spoken before us, asanteni sana, very useful information. My colleague and very productive colleague of mine, Atema, behind the scenes running the show. Thank you very much. I think the only thing I'll say is Kenya is open for business. The market is open for business. The opportunities are there. It just takes a bit of effort and not so much as it used to be before. We have so much access to the right people with the right information. So let's take advantage of that. Let's use the technologies available to help us access the market. Dosika, the app on Android, on Apple App Store. Please access it, use it. If you have challenges, talk to any of us. helpdesk@cdskenya.com if you need to speak to CDSC directly. And we look forward to supporting you. So have a good morning, good day, good evening, wherever you are. And God bless you very much. Asanteni.
Okay, thank you. And it's good you're mentioning Dosika. There's a question from Angela. What's the minimum investment in Kenya shillings to start trading with, to buy shares with Dosika?
Thanks. So Dosika is just giving you access to the current market. So with as little as 100, 200 bob, you can be buying shares through Dosika. So there's no difference in terms of the rules for what you have on Dosika and the other ways of accessing the market. So it's really that simple, to be honest. Yeah.
All right. Thank you. A round of applause for Mumo. Round of applause. Thank you. Now, the educator herself, Rena Hicks, the lady with passion for teaching. Give us your parting shot.
Thank you, Conrad. Well done to you and well done to the rest of the team as well. It's been a great pleasure to be here. I think the key thing is that I'd leave you with is please take time to understand the different products so that you take guesswork out of investing, because a lot of times people just see rates and we're very big on chasing returns and not understanding what's the risk behind all of this. What does this mean for me from a liquidity perspective? How does this align with my goals, with my plans, with my needs? And so please take time to understand the products and to see what works for you, so that then you make the wise investments. You have to invest wisely as well, especially in this season. We're not looking to lose money. Otherwise, I wish you all the best. And if I don't see you guys again, wishing you a Merry, Merry Christmas.
Thank you. Round of applause for Rena. Round of applause. The first panelist to wish you Merry Christmas. Very nice. And now, Samantha, give us a parting shot.
Oh, thank you, Conrad. Merry Christmas to you too, Rina. Merry Christmas, everyone. That was really nice. Yeah, it's good to remember that Advent. This is our first Advent Sunday. So, ladies and gentlemen, thank you for giving us your most valuable time on Sundays. We have enjoyed having this session with you. All I can remind you is remember what your objective is. Are you looking for capital growth or capital preservation? And if you're looking for capital growth or capital preservation, then make your choices appropriately. Please do call us to clarify. Remember, this call was for information, not necessarily advice. So you can always reach out to us and we'll be happy to come back to you with advice that's best suited for you to make a very, very informed investment decisions. I have seen some questions or some panelists asking that we should have a fixed income webinar. And Conrad, I'll leave that to you and Momo and your team to organize to make these sessions more frequent so that we can be able to organize and talk to you more. So make informed decisions, enjoy yourselves, and also last but not least, please make your investments little by little. Whatever you have now, do what you can today. I think it was Momo who said the best time to plant a tree was 20 years ago, but the second best time was today. So yes, I think we can borrow from that and say that the best time to invest is when you have money and when you're ready, because tomorrow we do not know how the market is going to be tomorrow. So thank you. Thank you for this opportunity.
Thank you. A round of applause for Samantha. A round of applause. Thank you so much. Really good information. And last but not least, the regulator himself, the policeman of Capital Markets Authority. Kamunyu, tell us something before we go to bed. Or wake up to go whatever you're doing on a Sunday.
Thank you very much, Conrad. I think you've wonderful moderation of the session. Thanks to the panelists that we were in the panel with, and thanks to everybody who has been listening, those who have been asking questions. I'm very glad that we've been able to do this, and I think it's been very, very useful. I think someone has said, I also got to learn a lot and also got some tips. I'll be looking for Ronnie just to give me that recommendation, sheet, so that as much as I may not be able to invest too much as a regulator, I can be able to also share those kind of recommendations. But I'll care to indicate that they were done by Ronnie. Just my parting shot would be twofold. I think it makes a lot of sense once we come here and we are having this discussion and the intermediaries are present. So it makes my work very, very easy. I don't have to talk about how the market is moving. Someone will take care of that. I don't have to talk about recommendation because I'm not even supposed to do that. But just to say, I mean, we have our licensees in the event that you would want further information, just feel free to speak to them. Just to say that I think the state of the capital markets currently is really sound, it's resilient and promising. And if you believe in Project Kenya, I repeat, if you believe in Project Kenya, then I think currently this is the time for you to actually invest. They say that it's that those people who are contrarian, who do the opposite of what everybody else is doing, who actually benefits from the market. So it is your time to actually come to market. I think about like 2 weeks ago, I attended a conference where Vivo, a company that came to the NSE Booker platform, was giving us their story, and you just get a sense of understanding how much can be done amid the noise, and how much they have been able to grow their company even under very what would call difficult circumstances. So I think as investors, we should just look at the brighter side. What does the current situation present, and what position can I take so that I be able to reap benefits in the end? So once again, just to thank everyone and to wish everyone Merry Christmas and Happy New Year. And I hope that we can continue doing this. We can continue now seeing people getting further advice and taking action. Thank you very much indeed.
Okay, thank you. A big round of applause for Kamunyu. A big round of applause. Show him some love. Please do. He's my boss. I'll get fired. All right. And we've had, before we check off, we've got Stephen. Yeah. Oh my God, I'm out of a job. So Stephen Atema has been doing a lot of work and answering your questions behind the scene. I don't know if you had liberty to show your face, Stephen, just to make sure you're not like an Android computer, thing that's been created by CMA. Are you able to show your face, Stephen, so we can salute you?
No, you can salute me through the emojis, but it has been a
Okay,
nice,
let's give
session.
Stephen a round of applause. So at this point, I'll ask all the speakers to please turn on your cameras so we can wave goodbye at everyone and wish them a Happy New Year, Merry Christmas. You can turn on your cameras. There we go. Everyone's on. Yes. And then we'll all sing, we wish you a Merry Christmas. No, I'm just kidding. No, don't do that. So this is to wish everyone a fantastic evening. Oh, you guys want to sing? I mean, come on, that's
why
very
not?
corny. Huh? Shall we sing?
Life is once, YOLO.
Okay, shall we
why
sing?
not? Yeah.
Okay, let's do it. Okay, we wish you a Merry Christmas. We wish you a Merry Christmas. We wish you a Merry Christmas and a Happy New Year. Oh my God, that sounds very corny. Okay, that's it, man. All right, thank you so much. It's been a great. Thank you for joining us. It's fantastic. Thank you, panelists. Thank you, Anayanshi. This is the first of many to come. We'll see you. Have a blessed week, and God bless you. Peace. Thank you.
Thank you.